And let's get started. So sorry for starting just a few minutes late. Looks like we had some back-end issues there, but I think we're ready to go. So as you see on the screen, odds enhancers, what are those? And this list of, 14 things. Don't read too much into this, but we're gonna talk about a few of these things. So what I want to do is I thought it'd be a great idea. My original thought was, what could I possibly do to help everyone really understand the whole market timing concept, the whole supply demand concept. Number one. Number two, understanding something is one thing. Turning it into consistent profits is another. And how do we balance that out with the fact that we have a 45 or hour-long session today and another one coming up soon, versus what we do at Online Trading Academy in a quite a long process inside the extended learning track. So how do we balance this all out so that you can walk away from this and really get it and really hopefully start making some money with it? So I thought the best way to do that was start today with, and I know last time we had kind of a basic lesson, start today with kind of covering some of those basic principles and points as far as the supply-demand strategy, but also, too, take things a little bit deeper with these odds enhancers. For example, now this page that you see here, I don't think I've ever shown this at FX Street. So some of these things apply to Forex, some of them don't. I'll walk you through that here. Okay. And the whole purpose of this is being able to look at a price chart and identify exactly where banks and institutions are buying and selling, where those key buy and sell orders are in the Forex markets by banks and institutions in any of the markets in any time frames, specifically any time frames, and how do we put all that together? So that's really what we're going to go over today. If you have questions, it's okay to ask them, but I think a lot of your questions will be answered during part one today, and then part two, the next session, we're going to go into the live markets and apply this stuff. And we'll probably take a look at some live markets today, but I really kind of wanted to take a little step back and have people learn this stuff, and then part two will apply it into the markets. You can read more on what part one and part two are of these presentations on the FX Street website. So let's jump in, okay, and take a look at these. So we'll go over charts in just a moment, but as far as these odds enhancers, so once you know the basic pattern, principle, and all that, which we went over last time. If you were in our webinar last time, and I'm going to cover some of that stuff again in a few minutes. But if you're in our webinar last time, the next step to that are these odds enhancers here. So how do we take the basic supply and demand, logic and rules and supercharge them? Okay. There are some things that we look at when identifying where banks and institutions are buying and selling. Number of things on the chart. These odds enhancers are those things. Now, make sure you understand that it's not like every time you look at a chart, okay, you have to, it's not like every time you look at a chart, you have to run through this giant checklist of 14 things to determine if a level is a good level or not, or you have a trading opportunity. That's not the point. This is an exercise that will help train your eye to identify those key levels. And don't worry, we'll get through it. Anything we don't get to today, we'll certainly get to in part two. And if we need a part three, we'll throw that in as well. So we're going to get there, don't worry. And I believe these are recorded as well. So now, just to wrap that up, when I look at a chart in any market, I took a trade today in the bonds and the 10-year note. 10-year note's not my favorite market. The euro's not my favorite market. The S&P, I don't have a favorite market. I go to where the opportunity is. Today there was a nice trade in the euro. There was a nice trade in the yen. There was a nice trade in the 10-year note and a great trade in the NASDAQ. TF, Praveen, you probably shorted that rally, right, into supply, I'm guessing. Actually, there were you could have went right into supply and you could have probably bought near the bottom too, but my guess is that's the trade you took. Yeah, you shorted the 742s. Great. Right into supply. But how did Praveen know to do that? Now, Praveen's been been with us here for a while. But so we need to get everybody's eyes trained like Praveen's are. All right. So these odds enhancers are some things we want to consider when looking at a chart. Now, I started on the floor of an exchange, the Chicago Mercantile Exchange, now one of the biggest exchanges in the world. So I had institution and bank orders in front of me. You don't need to look at a chart when you have those. You simply buy where the buy orders are and sell where the sell orders are. So the whole point of what we're doing here during this series of webinars is how are we able to see that on a price chart? Well, some of these odds enhancers, okay, are what help us see that. First, the pattern. We'll go over that in just a minute. The picture that represents institution, supply, or demand. We'll go over that in just a few minutes. Praveen found a nice one at 742 in the Russell, the TF. And Praveen, if you don't mind, send me that trade. It'd be great to take a look at what you did to make sure you got it. And let's see. There's my email address, sam@tradingacademy.com. Great to just see see what you did, how much money you made, where you did. Maybe we can see if we can improve that. Sounds like you're doing good though. Ali, great question there. Says I'm profitable with the techniques, but I only win only 4 out of 10 times. Am I okay? Well, if you're making money, I guess you're okay. But if you're only right 4 out of 10 times, that means you absolutely need work on identifying your levels. Okay? And not a bad thing. It's just, look, you're making money, you're profitable, and there's room for improvement. That's a great situation to be in. Okay? But if you really understand the odds enhancers, you absolutely should be better than 4 out of 10. Okay? Connie, TF is the Russell, so it'll move the same as the Dow and the Nasdaq and all those others. Okay, let's go on. So how did prices leave the level? We looked at that one last time. We'll look at that one again. How much time did price spend at the level? That's key. The profit margin trend retracements is very key. Large time frames. I'm going to spend some more time on this one today because we don't spend a lot of time on this one, and this is a key one. Levels on top of levels. You actually had that today in the equity index futures at the highs. Praveen had that levels on top of levels there as well. Time of day is important, and news. Okay, so we'll look at a number of these today. Let me bring up a chart and let's go back to the basics. And give me just a moment, and we'll do that. Okay, blow this up and then share it with you. And again, so I know what I'm about to go over, some people have already seen, but let me, just have a little patience. Let me go through that to catch everyone else up to speed, because not everybody has seen that. And then we will we'll certainly take this to another level. Don't worry. All right, so there's that chart. Let's take a look at the time of day. Time of day is important. We'll cover that. We'll get to it. It's on our list. And what I thought would be a good idea is I'm going to try not to rush through a lot of this stuff, because again we've got part 2, and again, like I said, if we need a part 3, we'll add it. But I think we'll be okay. Okay. No, you know what? I would love to take. Thanks for that comment, Bill. I would love to take credit for all this, but the reality is, there's no one in our group here today that doesn't know. This is just pure supply and demand. Even Adam Smith didn't invent supply and demand. It's been here all along. All I'm suggesting is this is the big difference, I think, between what you hear from me and maybe what you read in the trading books. Is all I'm suggesting is how you make money buying and selling anything is exactly how you make money buying and selling in the trading markets. For a number of reasons, the industry on the education side has gone in all kinds of wild directions. But look, that just creates opportunity for us. So let's jump in here and do this. Believe me, I also had a lot of big benefits. You want to know some of the benefits I had? I happened to, get a job at the Chicago Mercantile Exchange in the 90s, right before the markets really took off and online trading and charts and everything came about. So my timing was perfect, but it wasn't anything I chose. I have my buddies, my friends were down at the Merc, so it wasn't like I had this grand master plan. So a lot of things really fell into place for me. I'd love to say, anyway, let's move on. All right. So take a look at this trade, specifically the chart right here that I'm pointing to. First part of this I'll go through quickly, then we'll slow down. Okay? All right. So, again, make sure you understand, folks, what we are razor sharp focused on right now is what does that picture of institution buy and sell orders look like on a price chart? Let's start with that. Notice right here, okay, this yellow shaded area, prices are moving sideways. So there's obviously buying and selling going on. Let's only stick to, and another thing I want to say, so everybody's focused, let's only stick to things we know to be true. Let's not talk about anything subjective or anything we don't know to be true. Let's not make any claims or anything that are complicated. Let's just stick to things we know to be true. Here we know that prices are trading sideways, which means there's obviously buying and selling going on. Here, when prices decline or fall, we know that that can only happen because actually supply exceeds demand up here in that yellow box. But we only know that after prices fall, which is great. That's fine. So once prices decline away from this level, we determine that supply exceeds demand here. There's a big stack of sell orders on the trade desk. Okay? This is the Japanese yen. Now, this is where I would say that banks are selling the yen. Okay? Maybe it's the Bank of Japan, whoever it is, it doesn't matter. But this is where banks, institutions are selling the yen. One of the many things that tells us that it's the big money is because the average retail trader, like us in here in this group, don't have an account size to cause a supply level like this in the Japanese yen. I mean, does anybody with us here today have an account size to cause that? Probably not. So if it's not our supply, whose supply is it? Make sense? Now, odds enhancer number one. How did prices fall away from the level? Was this a strong move in price or a gradual move in price? Okay? Odds enhancer number one says the stronger the move in price away from an area, the more out of balance supply and demand is at the area. Okay? So keep that one in mind. All right? Because here's the thing. There's three ways prices can leave any level. Whether it's a rally or a decline is irrelevant. With both of those, there's only three ways that prices can leave an area. It could be a gradual move away from the area. It could be a stronger move away from an area, maybe with big red candles like this. Or the third choice is a gap away from the area. Okay? So I think we'd all agree that this was a pretty strong initial drop away from the area, suggesting a big supply and demand imbalance here. Odds enhancer number two. How much time did price spend at the level here? Was that a lot of time or just a little time? Okay, we'd probably say that was just a little time. There's just a few candles in there. If you want a good rule of thumb, for me, I look for like 3 to 6. Very ideal in any time frame. All right? Anything, too much more than that, not great. And I'll explain why in a moment. Anything less than that, for example, if you're looking for 2 candles to be a supply or demand level, now kind of everything in your chart becomes supply and demand. Okay? Does that make sense, Maurice? Right? So I'd say the general rule, 3 to 6 is good. So now why is that though? Why are few candles better than more candles? A lot of people here have read trading books. The trading books all say if you're looking for key support and resistance levels on a chart, look for areas on the chart where there was lots of trading activity. Many candles on the screen, right? Well, think about it. At price levels in any market, where supply and demand is most out of balance, are you going to get many transactions or very few? Right? Think about it. At a price level where supply and demand is so, very much out of balance, which is where you're going to get the biggest turn, are you going to get many trades or very few trades? You're going to get very few, right? There we go. Yeah. So it's very few. So the question is, to that odds enhancer, what does that look like on a price chart? Is it many candles like all the trading books say, or is it very few? It's going to be very few, right? So actually the trading books teach people to ignore the good levels, and that's a good thing. We like that. All right, so that's 2 odds enhancers, right? So instead of looking for, and let's take that a little bit deeper so you understand it. think of it this way. What moves market prices always? Is it filled orders or unfilled orders? Right? What's responsible for the movement of price? Anytime. It's unfilled orders, yes. Which is so crazy. I mean, it's not crazy. It's just, but if you think about it, people their minds are so backwards because we have candlestick. When we look at any chart, what are we looking at? We're not focused on the white space. Who looks at the white space? We all look at the candles. Can you understand? Like our eyes are trained to look at the candles, right? And focus on candlesticks, which we're doing, but that leads people to think look for areas where there was a big cluster of candles, lots of candles on the screen. But really, that's the opposite picture of what we should be looking for. And I want to bring, I wasn't going to do this, but I think this will really help you. Give me just a moment. I want to bring up another picture to help you with this. Bring it up for you here. Okay, so how many people here are in the XLT, by the way? Anybody here in the XLT? There's always absolutely. There's a few people here in the XLT, and whoops. Yeah, so of course you're always walking this fine line. I mean, you definitely everyone wants to help everybody out, but there are people that have committed quite a bit of money and time to the extended learning track program. So that's obviously where we go over all the odds enhancers and put all this stuff together. So if you put yourself in my shoes, you have to you have to respect, of course, people in the XLT program, and at the same time equally respect people who are not, and work it all out. But let's keep moving forward here. I think you'll get as long as you get the basics, you're definitely going to be better off and on the right track. And it's impossible to go over everything in the XLT in a 1 hour webinar anyway. But let's move on here. So take a look at the screen, and you can see all these stick figures. Now, what's the importance of this? Okay. All right. What's the importance of what you're seeing here? Pay close attention. If I took a regular chart and took the candles off the screen, okay, and replaced that with unfilled buy and sell orders on a chart, this is what the chart would look like. You would not see any white space where the white space is now. Does everybody clearly understand that? Does everybody understand that? If I took candlesticks off any chart, euro, anything, you know how you have candles on a chart now and you have white space? Remember, all we want to be focused on are where the big unfilled orders are. That's where you absolutely need to buy and sell. So if we took candlesticks, remember, candles or line charts or whatever, candles on a screen represent filled orders. The white space on a chart represents unfilled orders, right? Bids and offers. So if we took the candlesticks off the screen today and replaced that with unfilled buy and sell orders, this is what your chart would look like. Now does everybody understand that? Okay? You would see no white space at all. I'm saying, the white space would be where the candlesticks are. All right? Let me go back to a chart here, and I'll bring it all together. Whoops. There we go. So take a look. Now you look at back at the trade. So you see this yellow box? Okay. The white space above it is there because there's just a massive amount of unfilled sell orders or offers. Okay. This yellow box itself represents a lot of those unfilled orders. We know that because price moved away in strong fashion. We know that because there was very little trading there. 2 odds enhancers. Okay. Right. Oh, exactly, trader. But the reality is that's always going to be the case, and it's fine. It's fine as long as you know how to play the game, right? So another odds enhancer we want to look at is how far did prices move away from the area before returning back to the level. To keep that kind of short and basic without getting into too many details, make sure that, so here's where price came back to the level. This is where I sold short, right here, on the first retracement. Okay. Make sure that the lowest low here, okay, the distance between this bottom black line and this lowest low prior to this first retracement, I'll say that again, the distance between this lower black line and this lowest low prior to the first retracement, this distance needs to be at least 3 times, well, it's up to you, but I would say 2 to 3 times the distance between the two black lines. Okay? The orders weren't filled, Connie, because that was a price level where, willing supply exceeded demand, right? There just weren't enough willing buyers up there. Okay? Which again is how anything is priced. And if the trading markets confuse you a little bit, use any of these any of these odds enhancers and charts and all this logic we're talking about. Think of an example at the grocery store. And I'm just saying the grocery store because that's something we all do. We all eat food, right? We all pay for food. So forget about the yen or euro or anything. Chart, think in terms of your favorite food. How is that priced? None of the food we buy, well, pretty much, none of it stays exactly the same. Some of it fluctuates quite a bit. Some of it doesn't fluctuate that much. But the way it's all priced is exactly how the yen is priced. And the odds enhancers we would use to determine what's a good deal when you're buying, cantaloupe or avocados or a good, good salmon or something, if we were to chart that, we would be using the same odds enhancers and having the same lesson. In other words, if wild salmon in the grocery store, like here in Chicago, wild salmon, costs quite a bit, almost twice as much as farm-raised salmon. I eat a lot of fish. I think you're going to pay at least $20 for a good, wild salmon at the grocery store, fairly fresh. And now if that price dropped to like $10, your price is not going to stay there long, and you're probably going to have lots of unfilled buy orders down there because it's very cheap, and people now you're pricing it the same as farm-raised salmon, right? Everyone's going to choose the wild salmon. Anyway, I think you get the point, right? Okay. So we've talked about 3 odds enhancers, all right? But for those that are new to the concept, when price comes back to the level, okay, Ali, good point there. So, before I go to the next one, let me talk a little bit more about that last one. So when we measure this distance, what that does is it opens up that initial profit zone, that initial profit margin, this drop. How do we know that? Again, we're only sticking to things we know to be true. Okay. Now, how do I know that? How can I say that that's true? Well, the fact is price declined all the way to this point before returning back to here. Right? They declined to this point right here, which means that if I look left, all of this congestion here, which may appear to be demand, there can't be any demand there anymore. There can't be any buy orders in any of this price action I'm pointing to here as of this low right here. We know that for a fact. There can't be, right? Because if price came down to here, that means there was enough willing supply to get price down to here. All right? So that means after the first retracement, we're usually good for a very quick move down to at least this low, and then for anything beyond that, we'd have to look left and lower to find to find any other demand. Okay. Trend does matter. We'll talk about that in a minute. I keep kind of glancing over at the chat and focusing on the lesson, so if I'm missing a post or two, apologize for that. So these initial sellers here did all the dirty work for us. They absorbed all the significant buy orders that were sitting over here, okay, down to this price level. And then the balance of power shifted, the buyers took over. We are now at a price level where you had equal or greater demand. That's going to cause price to move higher. The only thing that's going to stop this rally is a price level where you have equal or greater supply. And here's the picture that represents that. We're starting to identify that today. So when price gets back up here, now we know another thing to be true. We know that we have some novice retail buyers buying right here. How do we know that that's true? Well, who would buy after, novice retail traders always make two key mistakes. Mistake number one they buy after a rally in price. That's mistake number one. Mistake number two, they're buying right into a price level where supply exceeds demand. Okay? A consistently profitable institution or bank would never do that. They would not be in business if they did. Okay? All right? It's like, well, I shouldn't go into this. So, anyway, I think you get the point, right? So if we've, so now we're kind of putting the whole piece of the puzzle to get the whole puzzle together. If we've identified that novice retail traders are buying here at the exact same price level where banks and institutions are selling, we now have the trade right in front of us. We now are presented with a low risk, high reward, and high probability opportunity. Does everybody get that? So this is not just about identifying levels. This is about putting the only two pieces of this puzzle together. It's identifying when banks and institutions are on one side of the trade and novice retail traders are on the other. When those two groups are matched up against each other, that's when the odds are stacked in our favor. That's when we want to take action. Okay? It's because the outcome of that equation, that battle, right, is so predictable. Very, very, very predictable. Make sense? Okay. All right, let's move on here. So we've talked about a few odds enhancers. The other one that I haven't really mentioned yet is that first retracement. Okay, we didn't talk about this last week either. All right. Now, before I talk about this other odds enhancer, Forex 1985 just made me think of something. The banks will take retail money. Absolutely. Okay, absolutely. You ever wondered why, the average investors and average retail traders, compare their returns to average, Wall Street firm returns or institutions and banks? It's extremely lopsided, right? Why is that? Well, it's exactly what we're saying here. Because, why would people buy right here, right? Why would people buy right at the supply level after this rally in price? Think about it. Because the news is almost always going to be good when prices are up, number one. Here's another big one. Look at the short-term trend in price when prices got up to this supply level. It's an uptrend, right? Every trading book on the planet just, plainly just says buy in an uptrend. That, only buy when you're in an uptrend. That would be like me saying only buy your groceries when price has gone up. Only fill your car with gas when price has gone up. Don't ever fill up your gas tank when price is down. Only fill it when price goes up. Only buy your favorite television set when it's going up in price. Don't ever buy it when it's on sale. You see how ridiculous that sounds? But that's exactly how everyone's taught to trade in the market. That's why I would say it's pretty simple and easy for banks and institutions. Banks and institutions are always made out to be the bad guys. And it's not like I'm sitting here defending them, but they really don't have to do all that much. It's not them that's doing anything sneaky. It's people that are buying and selling that are doing it completely the wrong way. Does that make sense? Another way to look at this, when a bank comes out and says, I'm sure there are some banks and institutions around the planet that are putting out bad news today on the euro, right? Sure, there's plenty that are, and yesterday, I'm sure every day you could find some bad news on the euro lately. The problem is the average investor or trader takes that as a sell signal. Okay, it's like when a Wall Street firm says, this company's a good company, they have strong management and a great balance sheet and strong earnings, and the stock's in an uptrend. They can say all those things, and those things can be 100% true, and I'm sure most of the time they are true when they're saying those things. But the average person takes that as a buy signal. That's the problem. Okay? All right? All right. Anyway. So I think you get the point there. Yeah. All right, let's move on. So the next odds enhancer is retracement. So all the examples I always show you, all the trades we pick out here in the FX Street sessions, we're always looking to enter the position the first time price comes back to a level. Okay? The first time. And why is that important? Well, think about it. What do these levels, these supply and demand levels represent? They represent, where banks and institutions are buying and selling. They represent a stack of buy or sell orders, right? So therefore, each time price comes, once price leaves at one of those levels, that stack of sell orders, in this case, in this yen, is as big as it's ever going to be. Okay? With each successive pullback into that level, what's happening to the amount of supply, the sell orders? Is it increasing or decreasing? It's decreasing, right? Yeah, Jose, I agree with you. Yeah, selling lately in the euro has been great, but again, you need to, even lately, you need to be selling rallies into supply levels. There have been plenty of them. Okay, every rally in the euro has been going right into a supply level, which has given you the very lowest entry. Yeah, so it's decreasing, right? So therefore, now if you think about what the trading books say, be careful. The trading books say, we don't want to take the first pullback in price. In other words, they say, let support resistance levels be tested a few times before you take them. Make sure they're strong. Well, be careful. Just be careful with that, because what the book is really saying is, don't take the trade when it's low risk, high reward, and high probability. Wait till it's high risk, low reward, and low probability. Does that make sense? Okay. Oh, no, Ali, I'd never use trailing stops, and I would never use trailing stops. Okay. All right, so let's move on here. So we've covered like 3 or 4 odds enhancers. Okay, I want to talk about, another one here. Got a few examples here. Let me see if we can find one here. Just a second. Let me go to the live market. There's one more I wanted to cover. Let me go to the euro real quick. Hang on a second. And see if I can find that in here. Just a moment. You know what? I think, give me just a moment here. Let me find that one. We had give me just a second. I'll pull up the charts for you. Okay. Let's look at the euro. Okay. Yes, we've got one here in the euro. I'm going to pull up a pretty big. I'm just going to make the chart pretty big, so everybody can kind of see it. All right. So look at a intraday time frame of the euro, right? And let me move the chat box over. Okay. So if you look below. Now, these are not the best demand levels I've ever seen, but take a look. It's the levels on top of levels concept. So if we have say a demand level below current price, the only thing that's going to make that bigger, well, think of it this way. If you were on the dealer desk, the trade desk, right, and you're able to trade your own account, and let's say the biggest stack of buy orders below current price is at a price of 24.50 in the euro, 124.50 in the euro. Okay, and you're at a price of 125. Where are you going to be comfortable putting your buy order? You can trade your own account. You've got the orders there. The banks are buying there. You're going to put it at 124.50, right? Well, what's the only thing that would make you more comfortable buying at 124.50? How about if there was an even bigger stack of buy orders at 124.25? Would you now be more comfortable buying at 124.50? See my point? Okay. So if you answered yes, then what does that picture look like on a price chart? It's levels on top of levels. Okay. This is one thing in the XLT that we like a lot, especially as an XLT, a lead XLT instructor. We really like that. I really like that a lot because if I'm giving trades out to a group of people, I don't want to be wrong, right? I want to be right. I don't want to be wrong. And I know that if I can find an opportunity where you have levels on top of levels, most of the time you're going to get a nice turn from that level, okay? Okay. Oh yeah, Maurice, you heard that? Yeah, that was I knocked something over next to me, but no big deal. Okay. Yeah, so there's a couple ways that you can enter this. In some cases, you can you can combine the levels, which is great. But when you can't, what you want to do is, well, there's two other things. In the XLT, what we look for is, look at this move away from the closer or proximal level, which would be the top one here. If this move was very strong, which this one was, you probably can just take the top level as a trade by itself because you're probably not going to make it down to the second level. This is a pretty strong level. But if that initial move is not, perfect, not just a really strong rally, okay, what some people will do, I'll see this in the XLT, is some people will scale into the position. They'll put on some of the position here in the top level, more of the position in the bottom level, with a stop for the entire position below both levels. Now, of course, you always want to adjust your position size so that you're not risking more than you're willing to lose. Make sense? Okay. All right. So hopefully that makes sense. Give me just a moment here. There's my email address again. I just noticed we're kind of out of time here. But I was going to go to another odds enhancer, but probably best to save that. I think our next session is coming up very soon. Mod or FX Street support can probably post in the chat when the next session is, part 2. What we'll do in part 2 is we will go over about 3 more odds enhancers, and then we'll go right to the live market and set up a whole number of these, both short-term trades and longer-term trades. And if you have any questions, I put my email address in there. Okay, yeah, so on the 19th, okay, of June, we'll see you again here at FX Street, and thanks a ton to FX Street for putting these webinars on. And I know you've got the FX Street event coming up. Was that this week or last week? I know it's or did it just happen? The conference. Yeah, I'll tell you the way FX Street put that conference on. It is it's in 2 weeks in Barcelona. Yeah, I was there. I think the first year. But if you've never made it to that, they really do it right. It's a combination of the hard part. The thing I don't like about expos is I go to expo, you do a big talk, and that's kind of it. But the way it's done at FX Street is you do this lecture, and then that presenter, if you really like what they're doing, you actually get to spend time with them, live in the markets. It's really a perfect setup that I've never seen anyone do. So the ITC is fantastic. They can make it to Barcelona. So maybe I'll see you there again sometime. But great stuff. I'll put my email address in here again, and then we'll take this deeper with part 2 on the 19th. Again, thanks for your time, and here's my email address. If you have any comments or questions, just shoot me an email. All right, thanks again. I guess you can click on the link there for more information about the conference. It's really great. All right, take care, everybody. Thanks.